Welcome to the Explainer. So, you're getting ready to file your taxes for the very first time. I know, it can feel totally overwhelming, right? You're suddenly hit with this massive wall of financial jargon, confusing forms, and that looming, low-key fear of making a mistake. But hey, don't worry. As your dedicated tax advisor today, I am absolutely thrilled to walk you through a foolproof checklist for the 2025-26 financial year. My goal is simple: to make sure you file perfectly on your very first try. We're going to break down the exact steps you need to take to confidently hit that submit button for the 2026 assessment year. Okay, let's just dive right into the elephant in the room. This is the ultimate nightmare scenario, right? You file your taxes, breathe a huge sigh of relief, and then bam, a few weeks later, an official tax demand notice lands right in your inbox. Why does this happen so often to beginners? Well, the root cause is almost always a failure to properly cross-check your tax documents before hitting submit. Seriously, it's rarely about intentional tax evasion. It's almost always about simple, totally avoidable discrepancies in the paperwork. Here's our master checklist for today. We'll start with the stakes, look at early planning, cover the vital step of reconciling documents, explain resolving AIS errors, and finally wrap up with some tips and choosing your tax regime. Starting with Section 1, the stakes. Let's look at what's actually on the line here. Tax experts have identified a whole bunch of costly mistakes, and honestly, making just one of these can lead to unwanted department notices, financial penalties, or your hard-earned refund being delayed for literally months. We're talking about things like filing the wrong ITR form, incomplete income disclosures, mismatched documents, claiming incorrect deductions, or messing up your capital gains. Or how about hiding foreign assets, picking the wrong tax regime, missing the deadline altogether, skipping e-verification, or, get this, just typing in the wrong bank details. I know, it sounds like a tax-themed horror movie, but as you'll see, it is so easy to avoid every single one of these traps. Moving to Section 2, early planning. It is all about respecting the calendar. While your final filing deadline isn't until July 31st, 2026, the real groundwork starts much earlier. On May 31st, institutions like banks and mutual funds submit their statement of financial transactions. That's basically a massive data dump of your financial activity. So early July, that is your golden window to reconcile and review all that pre-filled data, because by late July, the portal gets crazy chaotic leading up to that final July 31st deadline. Guys, I cannot emphasize this enough. Do not wait until the last week of July. Filing when portal traffic spikes severely increases your risk of running into technical glitches. The Income Tax Department actually enables online filing for key forms like ITR 1, 2, and 4 well in advance. Getting it done in early to mid-July gives you absolute peace of mind and saves you from the sheer panic of a crashing website just hours before the deadline. Section 3. Reconciling documents. This is, hands down, the most vital step. The absolutely crucial point here is that any gap between what you declare and what the tax department has on record is a massive red flag. Your Form 16 from your employer, your Form 26AS, which is your consolidated tax credit statement, and your annual information statement, they all must harmonize. Think of it like a story. If your employer says you earned X, but your bank reports Y, the automated systems are going to catch that mismatch instantly. So here is your simple 4-step reconciliation process. Step 1, literally gather or download your Form 26AS, your AIS, and your Form 16. Step 2, cross-check every single line of income disclosure. Step 3, scrutinize those Statement of Financial Transactions, or SFT, details carefully. And Step 4, if you find a mismatch, you have got to take immediate action. Please do not just ignore it, hoping it'll magically fix itself. It won't. Which brings us to Section 4, resolving AIS errors. Let's talk about fixing those institutional mistakes. To fix these errors, we have to understand the SFT. The Statement of Financial Transactions is data filed by banks, mutual funds, and non-banking financial companies directly to the tax department. You've got to scrutinize this, because if a bank makes a simple typo in their filing, that exact mistake flows right into your personal annual information statement. And you'd be surprised how common these reporting errors are. We're talking duplicate transaction entries, a wrong PAN, or wildly incorrect transaction values. This is actually a really huge risk if you have joint bank accounts or if you're a mutual fund co-investor, because the entire value of a transaction might accidentally be attributed to just your PAN. If you spot one of those errors, here is exactly what you do. First, flag the discrepancy on the online tax portal right away. Then, Step 2, you wait for the institution to file a revised SFT. Now, a heads up, this is a notoriously lengthy process because banks rarely prioritize the stuff when deadlines are looming. And finally, once they do file it, make sure you verify that your AIS is actually corrected before you file your return. As an advisor, I literally cannot stress this enough. Securing a clean AIS is your absolute best defense against a defective return. Uncorrected errors, they just snowball into intimation notices and frozen refunds. Do the work early, get the AIS cleaned up, and I promise your actual filing process will be a total breeze. All right, Section 5, Final Tips and Regime Choice. Let's secure that refund. Before you even think about hitting submit, check out the top 3 mistakes that will absolutely derail your refund. Entering an unvalidated bank account number, your refund just bounces right back. A mismatch with your Form 26AS or AIS, boom, immediate department notices. And choosing the wrong ITR form for your income profile renders your entire return defective, which brings the whole process to a grinding halt. Also, you must actively compare the old and new tax regimes based on your specific situation. The old regime is usually better if you have high deductions, think home loans or big life insurance premiums. The new regime gives you different tax slabs with lower rates but fewer deductions. Don't just pick one because it sounds nice. Skipping this comparison often means you end up paying way more tax than legally necessary. Always run the numbers. Finally, don't drop the ball at the finish line with these ultimate amateur mistakes. You absolutely have to report your savings account and fixed deposit interest. It's not magically tax-free just because it's sitting in your bank. Disclose all foreign assets accurately. Report your capital gains from shares and mutual funds. And please, whatever you do, do not skip the mandatory e-verification step after submitting. An unverified return is legally treated as if you never filed it at all. No way around it. We've covered a ton of ground today. If any part of this reconciliation process or choosing a tax regime feels like too much, please do not just guess. The stakes are way too high. Shoot an email to onlinetaxspecialist22@gmail.com for professional guidance. Trust me, it is always better to ask for help before you hit submit than trying to untangle a massive mess with the tax department later. So, as we wrap up this explainer, I want to leave you with one final thought. Are you truly ready to hit submit without double-checking your AIS first? Taking a few extra minutes to reconcile your data is literally the only difference between a smooth, quick refund and a registered letter from the tax department with your name on it. The choice is yours. Happy filing!